Hello friends, today I'm going to demonstrate you account receivables order to cash process. Though I'm not going to be creating a sales order, but I'll be directly jumping to account receivables, from account receivables to receipts basically, and then we'll be applying those receipts to the receivable invoices. So these are the steps which I've highlighted, these are the main steps which is basically which we need to carry out, or we need to configure before we create a transaction. So the first step basically is to assign appropriate role actually to your user account. Now there are three roles uh, f- uh, which are applicable for receivables. One is receivables manager, receivables specialist, and receivable supervisor. So you need to check which privileges are required actually, and based on that you have to assign that particular role to you, to your user account. The next step after assigning the user role is to provide data access. That means what level of data you can access, which business unit you can access. So let me share this one to you. I've assigned myself as a receivables manager and receivables specialist. I'm assigned to receivable manager. Right, you can see I've assigned myself as receivable manager, and though I've already assigned as a specialist as well actually, but I've not given any privileges or sorry data access basically to that particular role. So if you see, like, you need to assign a business unit, then only the business unit will appear so that you can enter the transaction against that particular business unit. Okay. The next step is going to be very important, which is going to be manage receivable system options. Actually, we are going to be covering a very important configuration, which is manage receivable system options. It is maintained at the unit level, and it has got critical implications for the way receivable app functions for a given business unit. So for each and every business units, the behavior is going to be different, the configuration is going to be different. So you have to come to the setup and maintenance, coming into the functional area, receivable, and you'll find manage receivable system options. You can select the business unit. So I'm just going to be selecting the business unit as I can't see my business unit, so let me actually there's a problem with the search. Actually, it's not so efficient. You have to come to advanced contains, and you'll find the business unit. Press the search icon. Okay, so the whole form has been divided into two different tabs. One is billing and revenue, and second is cash processing. Billing and revenue is more related to the collection, more related to invoicing, um, and cash processing is more related to the receipts which we are going to be receiving from the customer. So I'll just go through some of the important fields. Like split amount is more related to the collection. Like you can split. This is mainly to analyze uh, like between two different types of invoices. Like take an example. If your company is generating two invoices like $300 and $500, and if you are putting the 400 as split amount, what will happen is it will analyze the threshold, whether it's going, uh, whether open receivables is going below the threshold or above the threshold. So this is more of a reporting purpose, used for the reporting purpose. Application rule set is mainly when you are applying the receipts, how what will be the precedence, what will be the priority basically when you are applying the receipts. So this is going to be used, this law this particular rule is going to be used actually, and the application is going to be happening based on that rule has been set. Discount basis, whether you want to take the discount on amount, invoice amount, or a line amount, or line plus freight items and tax. So there are four options Oracle has provided. So these are the tax accounts, cross currency rounding account. So cross currency rounding account is basically um, used to record rounding errors amounts created during the cross currency receipt application. So when your receipt application, so take an example, if you are creating the invoice um, in USD, whereas you are receiving the amount in PLN, then there is a cross currency rounding account. Basically, rounding happens actually, and that fraction of amount is going to be captured in this particular code combination. So yeah, as I said, like this is more mainly related to the rounding, but when there is a difference between the currency basically is when so whenever there is a currency rate gain or a loss in the ledger currency, that will result from a cross currency risk application. So the example which I was showing you, now if there is any difference between two different currency, like between the exchange rate, then that amount is going to be captured over here, the loss, whatever loss we have incurred. So if you have raised the invoice when the exchange rate was $1, let's say 1.0, whereas like when you have received the amount from the customer, it was 1.1. So that difference is gain or a loss. So the exchange rate can go up or down. So whatever the gain or a loss is going to be captured over here. If it is gain, it's going to be captured over here, and if it is loss, it's going to be captured over here. You can have the same account. If you want to net this account, net this amount and keep it into one bucket, you can also do that basically. These are more related to like dunning letters when you're sending it to the customer, and statement delivery when you're sending the statements to the customer on a regular basis. So what will be my from email, from which email it should go actually, what will be the name and reply to email, what will happen if someone is replying back to you to your statement email. You can have a no reply as well actually, and what will be the subject and what will be the body. So you can maintain it over here. At the same time, you can override at the customer level as well. Late charges, whether you want to charge a penalty basically, so that also can be configured over here. These are some of them are like auto invoicing rule. Okay, so you can just set this purge interface tables. All these are like auto invoicing parameters basically. Coming back to cash processing. Now cash processing is more related to receipt, which I said. Now it has got like allow payment of unrelated transactions. You can tick that box actually. You can again you can say realize gains accounts or realize loss account. Even that can be done. You can that can be put in. Coming back to cross currency rate type. So if there is an exchange rate, uh, so you have to maintain the exchange rate type. It could be corporate or it could be spot or you could be user, it could be anything basically. So in this particular case, since I'm dealing with Poland business unit, my exchange rate comes from Polish central bank. So that's why like we have created as the exchange rate Bank of Poland and the National Bank of Poland, and the exchange rate is going to be marked actually to this rate type. Okay, so these are the main, and here also like you can have a auto cash rule set, which is completely different, which I can explain you later on. You can set this up, and you can set this up at the time of creating the receipts classes as well. Okay, so now let's move on to we have covered this receivable system option. Let's move to transaction types. So let's move to transaction type. Customer billing transaction type. Transaction types are associated to the reference data set. So if your transaction types are associated to a specific data set which is mapped to the business unit, then only those data sets are going to be visible at the time of capturing the transactions. So if I'm creating an invoice against that business unit, it will show me only those transaction types which are assigned to that particular reference set. If you are assigning the transaction type to a common, then it will be available for all the business unit. So we do have a transaction type called Poland RD. So this is specific to, I wanted to show only those transaction types which are going to be applicable. You can see like PPL survey. So this is one of the transaction type which and there are many transaction type which we have created because of the requirement, or business always wanted to segregate the transactions based on the transaction types. And the behavior, the whole objective of creating a transaction type is you can have a different behavior. So the behavior could be uh, whether it's open receivables, whether it's post or is open GL. What does it mean actually? When you're saying open receivable updates your customer balances each time you create a complete debit memo, credit memo, chargeback, on account credit with this transaction type. If the post to GL option is enabled, receivable post transactions with this transaction type to ledger, general ledger basically. Now, if you are setting up post to GL to no, that means you'll be able to create the transaction. You'll be able to accumulate your customer balances, but you won't be able to post that particular transaction into GL. This usually happens when you're doing a migration. So when you're migrating, you have already pushed all the GL balances into general ledger in the form of trial balance. And at the same time, you want to build your open receivables. If you want to build the open receivables and you don't want to post to GL, you have to create you have to create a specific transaction type and start pushing it all those invoices with this transaction type. Okay. And for each and every business unit, this is going to be very, very important actually. For each business unit, you have to have revenue account, receivable account, tax account, freight account, unearned revenue account, and unbilled receivable account. So this is very important actually, because when you are setting up this accounting rule, which I'll be explaining in my next slide, it is helpful because when you are creating accounting rule, some of the segment might come from transaction type, some of the segment might come from customer sites. So you can define your accounting rule based on that. Okay. This is very, very important configuration. Though like Oracle has provided the seeded one, but there are some payment terms which are going to be specific to your business unit. So you need to come here and add your own payment terms, because payment terms are going to derive your discount amount and the due date amount basically. And payment terms are assigned at the site profile of the bill to customer. It can be assigned at the account profile of the bill to customer. And at the same time, it can be assigned even at the transaction type level. So when you're selecting the invoice and when you're selecting the transaction type, that will be taking the precedence. And if you have set the flag on on the customer record or customer account level, basically saying override terms, that means system will allow you to override the payment term at the time of making the transaction. So let's check. So you have to navigate to setup and maintenance. Again, in the receivables section, you'll find receivables payment terms. I'll quickly search the one which are provided by Oracle. So 30 net immediate. So 30 net is now again the payment terms are also can be associated to the reference data set, and hence Oracle has assigned to common set. That means these payment terms are going to be common for all the business unit. And if I'm creating a specific to my reference data set, which is assigned to my business unit, then it will appear only at the time of only when I'm selecting that particular business unit. So these are common ones. You can see, and I'll just create one, and I'm creating a specific one, Poland RDS. Okay. Pepco 30 net. Okay, so allow discount on partial payments. That means if the payment has been done partially, so if I was supposed to be receiving 1,000, but instead I'm getting 500, should I be giving discount on the partial payments? So I can tick that box if it is applicable. Prepayment, whether this payment term is going to be applicable for the prepayment or a credit check. And the base amount, I'm just going to keep 100 discount basis, the invoice amount, where the discount basis date is going to be receipt date or application date or a deposit date. Okay, so relative. Now I'm saying 30 net. That means within 30 days I should be getting the 100% amount. You can also put the due by a specific date, or you can also put the day of month and months ahead. So if I'm saying like a 15th of the month and months ahead is going to be 0, that means every time is going to be 15th. But when I'm creating this is the portion which I'm going to explain it slightly more in detail, date of month and months ahead. Okay, so I'm just saying 30 days. After 30 days, I should be getting this amount from the customer, not immediate. Immediate means, and I can say I can give 5-10% discount if I'm receiving in 15 days. So this is my payment term. Oh, I didn't save this. Here I can say if I'm getting that 15 days uh, before the due date, I'll be generating the discount. I'll be giving the discount of 10%. And if I'm getting after 20 days or before 20 days, then it's going to be 15%. This is before basically. We have created it. It was not showing earlier, but yes, just created. Okay. Now coming back to day of month and month aheads. So let me let me give this example. If your cutoff day is 11th, let's say I want to process all my so if I'm going to if I'm going to capture the invoice or create an invoice um, before or after 11th basically, right? So after 11th, so my invoice date is on January 12th, let's say, but my cutoff has already gone actually. So I was supposed to be creating invoice on 11th. Anything before 11th is going to be taken to that month. So what will happen is the day of month and month ahead is set to 0 and day of month is 15, let's say. So my invoice is going to be created because of month ahead is 0. My invoice is going to be created in Feb. Now, if I set this invoice 1, and even if I'm creating in Jan, it will create in March. Okay, so this is the thing actually, like we have to understand from the payment terms perspective. So Oracle has given enough flexibility, like whether you want to create a payment term against that on that particular specific day, or you can put the number of days. So based on that number of days calculation, it will generate a due date basically against that particular invoice. Yeah, so coming back to my payment terms, the one which I've created, right? I've created this payment term, and if you see this payment term, we'll just walk through. My relative amount, my base amount is 100, that means 100% needs to be completed. So relative amount is 50, that means 50% and 50%. So the total of this should be matching with the base amount. All I'm saying, I'm not putting the days, I'm not putting any um, uh, due date basically. I'm putting day of month. So when I'm creating in the month of January, when I'm creating the invoice in the month of January, like 1st of Jan, let's say, the day of month is going to be calculated as 15th for the first installment, and the second one is going to be for 17th of the same month. Moment I'm saying months ahead, my my calculation is going to be forwarded to another month or the next month. So if I'm creating in the month of Jan, the due date is going to be calculated in the month of March because I'm putting as 1. Okay, and I'll quickly show you how exactly it's panning out. Actually, I've just created one invoice as well. Actually, let me open that invoice. I'll select this one and then I'll change one more time. You can see it's generated in the month of Feb because we have put as month ahead 1, whereas this was created as month 0. So this was created, the due date was created on 15th of that particular month. Okay. The next step is document categories and sequences. Now this is going to be playing a vital role if you are enabling document sequencing in ledger option. Now, since we have enabled document sequencing in ledger option for receivables, we need to put the document sequencing in place. So there are 2 steps for creating document sequencing. One is to create the document category, and then you need to create the document sequencing, and I'll show you. So the document category was created. So all I'm doing is basically creating the document sequence, assigning to the receivables, and then you're creating a document category. So here you're going to be selecting the document category, assigning the document category and the legal entity. Now, see, if it is if you are enabling in the ledger option saying this should be assigned at the ledger level, then it will ask you for the ledger. Since we have enabled it at the legal entity level, it's asking me for the legal entity. So you have to enable for both, like manual and automatic both. Okay. Next step is going to be accounting rule. Accounting rule. So my bad, actually, like I wanted to discuss auto accounting, not accounting rule. Accounting rule is more of like how you want to recognize your revenue, whereas this is auto accounting rule. I would say auto accounting. Yeah. Now, what is auto accounting? Auto accounting is used to specify how to determine the default general ledger accounts for transactions. Either you are entering, whether you are entering it manually or whether you are importing those transactions from the legacy applications. So just go to the Fusion workbench. Okay. Here you're going to be selecting your entity. So I can select my entity, which is going to be this one, let's say. Now, when you can select your business unit, or you can just press the search button, it will show you all the legal entities. Now I'm going to make it more specific one so it becomes easier for you to scroll down, right? So now if you see, like Oracle has provided these account types. The account types are going to be constant. You cannot modify those ones. So or this is associated with the business unit. So when you're creating, associating business unit with the account type, saying freight, now, how this freight account is going to be derived, that's going to be maintained over here. Now, if you see, this is my chart of account, but then it says my entity segment is going to be constant because yes, business unit is this is business unit specific, so I can make it constant. But account can be the same actually for all the business units. So for that reason, I'm just saying the account is going to be derived by site because site is always associated. Customer sites are always associated to the business unit. So I'm saying customer site. The cost center is going to be constant value. Intercompany is going to be also site, which can be pulled out. So whatever has been defined for the freight. So we have a freight code combination over there, right? So it will pick it up some of the segments and it will build the default value. But this default value, when it gets posted to, when it gets assigned to the transaction, that can be overridden by, before putting into the GL, you can override through subledger accounting. Okay, so now this you can see like a revenue account. You are coming to revenue account. Revenue account, yes, my entity will be PPL, but my revenue account is going to be derived from transaction types. Whichever transaction type, if I'm going to select, so I might have created multiple transaction type. Like let's say services, and Pepco had like many different sources from where they wanted to create the invoices. Now, in order to assign those invoices to appropriate revenue, you need to create the transaction types. So I'm deriving this from transaction type. Intercompany also going to be derived from transaction type, and the rest of the segments are going to remain the same, as going to be constant. So this is how we can generate a default value when you are creating the transaction in the first place. Okay. Taking up is manage receivable activities. Now, quickly understand what is receivable activities. Now, we are getting the default accounting information from account auto accounting, right? Like these are for transactions and receipts. But there are some activities which are carried out on the transactions or receipts it could be adjustments, it could be chargebacks. Now, for those type of activities, even the late payment charges, yeah, yeah, so bank error, claim investigation. So those are the activities which are going to be maintained within receivable activities. And I'll quickly take you through the screen. You have to come to same receivables workbench, click on manage receivable activities, and I'll show you the one which we have created. So, so these are the standard ones. So we have created for business within business unit adjustment reversal. Okay, and you can select the GLSO. We haven't put the GLSOs, but you can always put the GLSOs. Now you can put the activity GL code and you can put activity GL account. The activity GL account is to allocate the expense of revenue to the general ledger account to a specific for a specific receivable activity. But if you don't want to put us to a specific GL account, you need to put the distribution set. You need to create a distribution set and then associate the distribution set over here. This distribution set is to allocate the expense of revenue to the distributions to multiple accounts basically. So when you're creating the distribution set, you can say like, okay, 10% should go to this account and 90% should go to this account, but total should match to 100%. So you can proportionate your amount using the distribution set. Okay, so there are like seeded ones as well, which Oracle has provided. You can see here, or undiscount activity GL account, and you can put this GL code combination over here. Discount I don't have, I think. We don't have discount. I'm just selecting any for the sake of okay, I'm just putting in it. Okay. Okay. Tax rate code source basically. There are three things like none, invoice, and activity. Now, if you put none, that means even the tax amount is going to be assigned to this GL account source. If we are putting activity, then it will allocate the tax amount to the asset or liability tax account specified by the activity. And if we are putting as invoice, if you're selecting the invoice, it will distribute the tax amount to the tax account specified by the tax rate code on the invoice. Okay. Configuration step is receipt classes and methods. This is very important from a receipts perspective. Let's go to Fusion screen. Same setup and maintenance. Within customer payments, you can find receipts classes and methods. You click on receipt classes and methods. So these are the receipts which we have created, classes which we have created. So one thing one has to understand is like, let's say, take an example, I've created a web receipt classes, right? So you can give the name of the receipt classes and creation method, whether it's going to be manual or it's going to be automated, whether you need remittance against that particular receipt classes. So if you need remittance before the receipt gets cleared, and the clearance method. Now clearance method could be, and show you a couple of clearance methods. Okay, so the clearance method is directly basically. The directly means this method of receipts you don't expect to be remitted to the bank and get it cleared. It is assumed that these receipts are cleared at the time of receipt entry itself, right? This is direct basically. By matching is, yes, you need to match your bank statements in cash management and then you're going to be setting the status to cleared. By automated, the third one is by automatic clearing. Now this receipts can get cleared only through clear receipts automatically programmed basically. This is ESS. That's a concurrent program which we have to run to clear those receipts. And you can also clear these receipts in cash management. Okay. So when you come to receipt, the first part is a receipt. The second part is receipt method. You have to create receipt method because when you're creating the receipt, it will allow you to select receipt method and it is automatically associated to the receipt class. So receipt, you can give the name receipt method as like electronic, it could be check, etc., etc. And then when you come to this part, this portion, it will ask you to put the remittance bank account. And this remittance bank account is going to be specific to the business unit. So your receipt class and methods are, I would say, global, but when it comes to receipt bank remittance bank account, it's going to be specific to the business unit. Okay. Let's move to account. Let's move to manage approval limits. Now, let's log in as Prashant. So I'm going to be logging as Prashant because I cannot assign approval limit to myself. So I need to log in as someone or someone else needs to log in as them and then assign approval limit to myself. So you have to log in as Prashant or like you have to log in to different user, go to setup and maintenance, come to receivables, manage approval limits. So in this frame, like you can set up approval limit for your users for a specific transaction activities for a specific amount per currency. So take an example, if I can do the adjustment for USD, the approval limit is going to be different. But if I'm doing the adjustment for um, zloty, which is a Polish currency, then the approval limits are going to be different. So if I click here, I'm going to click. I've already given approval limit to myself, so I'll just select myself. Right, so I've created approval limit for in zloty for document type, and I'm going to create. So you can give approval limit for adjustments, credit memory funds, receipt write-off. There are three activities, transaction activities, which you can carry out, for which you can set up the approval limit. Again, I'm going to set up a limit for US dollar. That US dollar is going to be slightly different. I'm going to say 200 US dollar. Okay. So when you enter an adjustment outside your approval limit range, Receivable will assign that adjustment in a pending state, unless and until like someone with appropriate approval limits will either approve that adjustment or reject it. Okay. So now before we create invoice, we need to just ensure receivable calendars are opened. Okay, so let's go to I usually go to General Ledger Accounting, where you can see the snapshot of all the calendars. Well, it could be like payables, receivables, fixed assets. You can see those calendars. So let me select Poland. Right, so you have opened, so we have opened this calendar as well as like we have opened this receivables as well actually. So you can see the GL calendars, and once you've done it, okay, you have to come back to again. Or I need to check the ledger set basically. So receivable calendar, so you can see my receivable calendar is opened actually. So I've already opened it for the month of Jan. Feb needs to be opened, which is okay. Okay, now coming back to your workbench receivables. This is where exactly we are going to be creating the invoice. So you can see the info. Let's over here. Left hand side, it will show you all those invoices which are in incomplete state. The one which are still required approval. This is for the research, and this is for the import exceptions. That means when you are importing those invoices, any exceptions will come over here. Let's create invoice. And as I said, like you need to select the transaction source. This will decide what sequences needs to be, whether it needs to be sequenced or whether we need to create a sequence or not sequence. Yeah, so that will be decided. And transaction type is mainly for the revenue receivable accounting. Okay, so I'm just selecting invoice. Bill in arrears in bill advance. So I'm just selecting bill in arrears. This will decide whether you want unbilled receivables, because if I'm saying in advance, that means I haven't received the bill. So bill in advance will create it will go to unbilled receivables. Yeah, this is mainly for the receivable side. Now, when I'm selecting ABC Consulting, let's say it will this will be populated automatically 30net. But as I said earlier in my earlier session, if you set the value override terms at the customer site level, it will allow you to change the payment terms. If you don't set that one, it won't allow you to change the payment term at the time of creating the transaction. So I'm setting up now. Okay. Description is this is test. I'm not going to put anything. I'm going to say 750 no text classification code. I think we are pretty much done actually. Like document number is going to generate automatically, but payment I've not put payment terms. Yeah, payment term is I've put payment terms, but there's no payments as yet actually. You can put all the PO revision dates and etc. if there is any PO, but I'm not putting all those information right now. Okay, and pressing the complete button. Right, okay, so I've selected billionaire. Now it will ask you, because we haven't selected immediate as a payment term, it is asking me to put the accounting rule. This is called accounting rule. When exactly you want to recognize your revenue, whether you want to defer it or you want to like spread into multiple months, or you want to recognize revenue immediately. So for the sake of demo, I'm just selecting as immediate. That means revenue is going to be recognized automatically. But if you don't put that way, then what will happen is some of the portions is going to be booked in revenue, and some of the portion is going to be booked into unearned revenue. and that is going to be recognized only when you run the revenue recognition program. Okay, so I'll explain that as well, that part later on. Oh, I didn't put my memo line, that's the reason. Okay, this due to some reason it's got overwritten, so I'm just selecting. What's happening? Right, so we need to just check the distribution, because distribution should come automatically from your auto accounting. But if there is anything which is missing, then the distribution does the account code won't get populated properly. So if you don't get properly, then you have to manually add it. Yeah, this is the reason actually, like we were just selecting the bill in area advance and bill in arrears. That could be the reason. Let me create one more time. Or I can select default one. I'm just selecting actually, and I think it should, ideally speaking, they should not get generated. Unbilled receivable should not be part of that actually, because okay. So now once we have created, you can come out and you can later just query that particular invoice what we have, which we have created just now. I'm going to select, and I think I selected 2 invoices today. Okay. So this is the one actually which we have created just now, 750. Let's check the distribution installments first. If you notice, it has created the first installment on 15th, second installment on 17th. Can you recollect how exactly is happening right now? I'll quickly show you. It's coming from here actually. So day of month, my first installment should be 50/50. Right? So my first installment should be created on 15th, which is month ahead is 0, and second installment is going to be 17th. Month ahead is 1. Now since we are creating before 15th, it's not falling into this, it's falling into the same month. The first installment is falling into the same month. But since we have said, even this one is falling into the same month, but since we have said months ahead, it adds up another month on to calculate the due date. You can see like 2/17/25. I'll show you one more thing. Now if I say my payment term is 7, day of month is 7th, it should be 0, and the day of it should be creating a ninth. Now let's see what exactly it creates now, because seventh has already passed in. So it should create on 7th of Feb. I think we'll have to change something to put it incomplete first and then complete. Let's see. Let me check. Why is not selecting? See consulting. This is the one actually we were discussing, right? So right, so it's calculating, it's not calculating it's not taking the cutoff period. It used to happen in payment terms, like when you're defining for the payables. In payables, you can define your cutoff period. So from that day, it starts calculating. But in this particular case, it's just selecting the same month. So it's not selecting any cutoff period. So even if I'm saying, uh, even if I went saying like seventh of any month, it just calculates the seventh of that month basically, whichever month it is in. But the months ahead is going to calculate it properly. Yeah, months ahead. So regardless which month, so which month you are entering the transaction in, it will always take seventh as the date and months ahead. Months ahead is zero, but in this particular case, it will add just one to get to another month. Okay. So this is in complete state right now, and we can review the distribution. Okay, let me generate. So this is not enabled at this point of time actually, like it is enabled to other invoices, and I'll quickly check why this is a problem basically. So I don't see any problem here because it just split it into 750 was split it into 250 50%, and so still waiting basically, like why is not happening. Okay, so anyway, we have created the invoice, and I'll make sure like this is accounting has been generated, and then I'll show you that part, and then we'll enter the receipt against this particular invoice. So open this invoice, the one which we created, and we'll see okay what exactly the status is now. So now if you see like account in draft, that's been enabled. I'll tell you the reason why it was not enabled. The reason behind was the revenue recognition program was not run. The moment you run revenue recognition program, it will automatically set to account in draft. Now, if you don't put the invoice rule, then you don't need to run the revenue recognition program. But if you are putting as in arrears or in advance, you need to set this revenue scheduling. Now, in this particular case, I've set the rule as immediate, so I want to recognize my revenue immediately. But in in different cases, based on the different requirement, basically, you might have to recognize your revenue at different time intervals. So if there is a such requirement, then you need to set this as a rule. You have to select the rule, or you can create your own rule basically when exactly you want to recognize. and then you need to assign this revenue recognition rule over here. And then you have to run the revenue recognition at different interval times so that the revenue is recognized. So what will happen is, if the revenue is not recognized, it will park your amount into unearned revenue. And as soon as you are running the revenue recognition program, it will move that fund from unearned revenue to earned revenue, or like a revenue code combination. Okay, so we'll run this. We are counting. Now, if you see we are counting, it is very straightforward. Like I'm just by debiting my receivable account and crediting my revenue account. Now, if you put the scheduling, then there will be multiple revenue accounts basically. One is for unearned revenue and second is for revenue account. If you see the review the installments. So do you remember when we took the payment method as Pepco split? The whole idea was I want to split my payment. My 50% is going to be due after 6 days. I think we have said on specific date, basically on 7th of every month, and my second installment is going to be due on 9th of every month, but months ahead was one. That means it won't be in that month but following month. So hence this due date was set to 7th of Jan and 9th of Feb. Okay. Before we create receipt, I would like to touch base on receipt method. So if you come to customer payments, receipt classes, I'm pressing the search button. So this is the receipt class which I have created recently. And what it does is, in this particular receipt class, I'm saying I need remittance method to be set to standard. And I want clearance method to be by matching. That means by matching means like when you're going into the cash management, I would like to match that particular receipt in order to put into the cleared state. And remittance method is standard, is not none. Remittance method standard means I'll be going through the remittance method. So like it's the receipt method is wire transfer. It should not be wire transfer. It could be like back transfer, or it could be like check payment or something like that, basically. And this is my account, remittance account, where the amount will come in. Okay, 4149. So let's create a receipt and apply to this particular invoice. Selecting the business unit, I'm going to select wire receipt method. If you select receipt method as a wire transfer, automatically it will pick it up. It will be assigned to a proper receipt class, and that receipt class understands, yes, you need a remittance to be done basically for this particular receipt. I'm going to say 001 to 2025. I'm saying I'm giving only part payment right now. So because of this receipt class, because we had only one account mapped to the receipt method, it will show you only one bank basically. Otherwise, you can have many banks basically associated to one account. This is my customer. I'm going to select. I'm not selecting the bank here. So this is my first payment, which was due on 7th of Jan. I'm pressing the submit button here. So it is not selected. Okay, because I've selected it manually, that's why. Okay, so it has calculated the discount as well, actually, because if you see our payment method, we have said I need to claw back, I need to put the discount. If it is, I think it was 10% or 15%, I can't remember. But if I'm paying earlier, then I'll be getting the discount actually. The supplier will be getting the discount, the customer basically. This is a problem. Okay, so the error which we were getting actually is saying undefined or user-defined exceptions. This was related to receivable activity. So what we have done is, I will quickly show you. If you see this one, like these are the standard one, or I earn discount and earn discount. This code combination was not populated. So what was happening is when you are applying the receipt to the first installment, and we have defined that if we are making a payment earlier, then we might get a discount. So the customer might get discount basically. So this was not defined. So I've defined, and now we'll move on to the receipt which we have created. Add open receivables. Press the search button. Select the installment. So this is the one, actually the first installment. The second installment never had discount option, but the first option, the first installment had the discount option. That's the reason actually, like it was generating the discount portion, and then it's trying to assign that discount portion to a particular GL code combination. Okay, so if you see like discount, so this 37.50 is going to be parked into Oracle undiscount. I'm pressing the save button. Okay, so now it's saving. Save and close. Now we'll come to our invoice. Let me query this invoice one more time. just going to query customer number 21003. This is my invoice. And this is my invoice amount, which I'm supposed to be getting this amount money from my customer. If you go to view balance details, you'll find the receipt has been captured against or applied to this particular invoice. Now let's create another receipt and we'll see. Or I can create an adjustment, let's say. Now this is the receivable activity which we are talking about. Okay, so this might not be opened actually for this particular business units, hence we are not able to, or we haven't put the approval limit actually against the receivable adjustment, like adjustments. Okay, so let me create another receipt and apply it to the second one. Second installment. Same thing, wire transfer, RCPT 002 to 025. I'll put 300. Okay, I'm not going to change anything except for this site. I need to select the site, add open receivables. Now if you do the search now, the first installment is closed. The first installment is closed. The only left is the second installment. So I'm just going to add to this one. So we haven't applied it has. So let me go back to the receipt which we have created. Okay, so the reference has been selected, but we haven't applied, so we need to apply this. That was only for the reference basically. So I'm going to select this one. Done. And if you see, the applied amount is going to be 300 because we have entered the receipt amount as 300. And now I'm going to press the submit button. Okay, that's done. Coming back to the invoice, view balance. I think we need to query again. Okay, so can you see 637.50? So we have applied, so only balance is left is 75, and the discount has been parked actually minus 737.50. Okay, so this was the receipt part, and the next step I'll show you the adjustments. Okay, so we have created receipts RCPT 001, and we have created RCPT. This was for 300 and the first one was for 375. Okay, let's move on to the next step. Now the next step is to create adjustments. Before we create adjustments, we have to just make sure you have defined receivable activities. Now there are seeded activities which are created by Oracle, but we need to create your own receivable activities basically. So okay, let me okay, so this is a receivable activity which I have created calling as agree credit adjustments, and GL account source should be revenue on invoice. Now one thing we have to bear in mind actually, because we have enabled document sequencing, you need to create document sequencing against those categories. So let's move to document sequence category. Okay. And I'm going to select the one which we have created. So whenever you're creating the receivable activity, automatically document category is created. So this is my document category, and I have to just make sure I'm creating the sequence against that category. I'm giving the document sequence name, put it as receivables. You can select common. These are common receivables. Setup, I can select this as a module. Legal entity, I'm going to put the date. It's a backdated one. Manual. Okay, so I'll just save, press the save button to save those sequences. Now you come back to the invoice which we have created. Okay, so this is the invoice which we have created, and we have created a receipt against that particular invoice as well actually. So you can see like manage adjustment, plus sign to create adjustment. You can see like document sequence does not exist for the current document. Right, so I've gone back to the document sequencing setup actually, and due to some reason that record didn't get saved, so I've just recreated that record actually for this particular category called credit adjustments. I'm saying invoice adjustments. I'm saying 10 PLN. I can put the adjustment reason if you want. press the submit button. Okay, so if you see, there's an adjustment which was created. It has been approved because it is within our approval limit. I'll quickly show you where exactly I've set this up. If you go to receivables, approval limit, and you can search my name. So against document type adjustment, the limit is between 1 and 1000. Now, if it is going beyond the threshold value, it will go in a pending state. And whoever has got like higher limit, approval limit, basically they'll be able to approve for us. Now, since my limit was between 1 and 1000, it got approved straight away. Adjustment is 10, and now you can see it's added up to 85. Initially it was 75, so now it's added to 85. Okay, so this is an adjustment basically, and you can keep adding the adjustments on the same invoice. Now you can adjust at the invoice level, you can adjust at the line level, you can adjust at this. I can show you adjustment at the charges level. We do not have charges at the moment, but anyway, late charges. There's no late charges at the moment. That's the reason. Again, now as I shown you, like this is adjustment, but since I've put as 1 instead of -10, it has gone into the approval, pending approval. I might have to change this limit to -1000. Oh, I can't update myself actually. Yeah, that's the thing. So I'll log in as someone else who can approve my adjustment. Oh, why is it not happening? No, actually, I might have to go to setup and coming to receivables, approval limit, and I'll change the approval limit. And I log back in again. I can approve. Now if you go back to the invoice, and we'll check the transaction activities, or we can check even, so we can check the balance activities In that you can see the adjustment has been removed because we have changed the adjustments now, so we have reversed the adjustments. Okay, so this is how exactly you can increase your value of the invoice, or you can decrease the value of your invoice by doing the adjustment. Okay, hope you liked my session, and if you haven't subscribed to my channel, please do subscribe to my channel. Thank you.